Hi, my name is Sean Stevens of a global listed infrastructure organisation. Thank you for tuning in to the latest edition of the GLIO webcast series. Today we're joined in the studio by Scott Balfour, CEO of Emera, and Simon Ong of Clearbridge Investments. So, without further ado, let's hand over to Scott and Simon.
Well, thank you for the introduction. Hello, everyone, and welcome to today's Fireside Chat. My name is Simon Ong, and I'm a Portfolio Manager and Director at Clearbridge Investments for the Global Listed Infrastructure Strategy. Today, I'm joined by Scott Balfour, CEO of Emera. Scott, how's it going?
Everything's good, Simon. Good to see you again.
Likewise. Scott, thank you so much for your time today. Before we talk about the company, can you please provide a quick introduction on your background and how you ended up leading one of the largest regulated utility franchises in North America?
Yeah, not a straight line, I guess I would start with, but started my career in commercial and then corporate banking, doing workouts, left for a client into the construction industry and sort of progressed my career there for 17 years in a very, sort of capital intensive, labor intensive industry that with a business that was building a lot of energy infrastructure. And ultimately, that led to the opportunity to join as CFO at Emera about 12 years ago, and have been in this role now for almost 7 years.
Wow! And what an amazing career you've had. Even though it wasn't a straight line, in the end, a very successful career so far, and definitely moving forward as well. For those that are not familiar with Emera, can you please provide a quick introduction of the company and your key business units?
Sure. Yeah. So. And we're obviously a public company investing in premium utilities, both gas and electric, but mostly electric. We are headquartered in Halifax, Nova Scotia, on the east coast of Canada. Trade on the Toronto Stock Exchange, a TSX 60 company. But even though we're headquartered in Nova Scotia, 70% of our business is in Florida, and Florida is a big part of the Emera story today. Another 20% of the business is in Eastern Canada, and then the final 10% of our business is in New Mexico and the Caribbean. And we are now 95% regulated, probably a little more than that, in fact. So principally own and operate regulated utilities now with a heavy weighting in Florida.
Perfect, and that's a great introduction, and that's actually where I wanted to start the conversation, because historically, Emera was solely a Canadian regulated utility company with Nova Scotia Power, but in 2016 you went south of the border. You acquired TEPCO Energy, which gave you access to a number of US-based utilities, most notably Tampa Electric and Peoples Gas in Florida. In your opinion, why was that such a transformational deal for Emera? And if you can also talk about why you regard that jurisdiction as a premium franchise and a premium jurisdiction.
Yeah, it's a really good question. I mean, there's no question it was a transformative transaction for us. It's starting with the fact of scale, right? It was effectively doubling the company in that single transaction, announced in 2015 and closed in 2016. And for us, the things that make us so proud and optimistic about our future is the things that really drove us to the interest in TEPCO. That was the acquisition at the time, particularly as it relates to Florida, because Florida as a country would be the 14th largest economy in the world. Mm-hmm. Population today of 23 million people, and somewhere between 1,000 and 1,500 people continue to move to the state of Florida each and every day. It's got a very vibrant economy. Its political climate is one that encourages, supports capital investment and business investment in that climate. And so it creates that opportunity, supportive environment for us to be investing capital on behalf of our customers. And it's a very constructive regulatory environment. The regulatory environment there is, it's very disciplined, and it certainly, sort of fulfills its obligations fully, but it also understands that in order to attract the capital that's needed in order to invest on behalf of customers, there has to be a reasonable return on that capital. And so, we've seen very balanced, constructive regulatory outcomes in the state of Florida that's supporting the growth profile that we see, where, the growth that we're seeing out of both Tampa Electric and Peoples Gas has been very strong since our acquisition, and certainly the future continues to look very robust in terms of the growth and capex opportunity that we've got in the state of Florida.
Perfect. And you mentioned that, Tampa Electric is growing at a very healthy rate. And, look at your rate base and your asset base, it has very reliably compounded at high single digit per annum over the past couple of years and probably moving forward as well. And among those drivers, decarbonisation investments seem to have been one of those drivers. Can you talk about how you've decarbonised that franchise over the last few years and talk through some of the key projects that drove that growth and also any opportunities that you see moving forward?
Yeah, it's interesting because unlike in Nova Scotia, which I'm sure we'll chat about shortly, where in Canada there are legislative requirements in order to decarbonize or to meet renewable energy standards. That's not the case in Florida. And when we acquired Tampa Electric and Peoples Gas in 2016, Tampa Electric had less than 10 megawatts of renewable energy on the system. It was a coal and gas-based generation mix. Now and since 2016, we've now invested almost $2 billion into what is now 1,255 megawatts of solar that is active on the system. By the end of 2025, we'll have another 250 megawatts active in the system, more solar per customer than any other utility in the state. And in the process of that and installing some battery technology along the way, we've been able to also retire or repower 3 of the 4 large coal units that Tampa Electric used to have. And so while we're not doing that because of a regulatory or legislative requirement to reduce carbon emissions or to meet renewable energy standards, we're doing it because it is saving Tampa Electric customers money. And it's reducing the exposure of volatility to global fuel prices. And so that's really been part of the story today. There's less than 5% of the generation mix in Florida is now coal. It's principally natural gas and solar. And natural gas is going to continue to be an important part of the energy mix in Florida. The ability to add more solar is certainly there. The ability to add wind, not so much. It's very windy in Nova Scotia. It's not so windy in Florida. And so one of the things that we've really been focused on, in addition to continuing to invest in solar and battery technology, as you would expect, but we have an opportunity to explore carbon capture. Sort of quite a unique opportunity with a facility that originally had some Department of Energy funding from the U.S. government. Today operates with benefit of 2 8,500-foot wells deep into the subsurface in the jurisdiction of this is in Polk County at Polk Power Station. And the geology we know from these wells is a world-class opportunity for carbon storage. And so we're pursuing this carbon capture and storage facility there in order to capture the carbon from Polk. We've got now $80 million of funding from the U.S. government in support of the FEED work, the preliminary engineering work that's underway, advancing towards a final investment decision in 2026. And a capex profile that would really extend probably from 27 to 2031 and in service in 2032. And what's interesting about this is on the merits on a standalone basis, it would be very hard to justify the economics of this. However, the Inflation Reduction Act has really enabled this to be something that is actually attractive financially for Tampa Electric customers, as well as creating a pathway to eliminate the risk for Tampa Electric customers, the optionality to avoid the exposure to either future carbon pricing or renewable energy standards or carbon emission requirements. And so really becomes a win-win for customers. And this is part of what Tampa Electric has actually presented to its regulator recently in a rate case that is awaiting decision sometime next month.
Perfect. And it does sound like a very long secular growth profile that's, to your point, backed by very strong policy support. You mentioned the IRA and the investment tax credits that underpin a lot of those investments. I wanted to pivot to the climate side and physical asset risk, because increasingly we're seeing more frequent and severe climate events across North America. We're seeing fires, we're seeing storms, we're seeing hurricanes. And in that context, infrastructure physical asset risk is increasingly an area of focus by regulators. Now, in Florida, you're a coastal state, so you do get hurricanes going through your service territory. Can you talk about your preparedness for climate events?
Yeah, and it's a timely question because about a week ago, right now, Hurricane Helene hit the coast of Florida and obviously impacted the greater Tampa area. Came ashore in Tampa as a Cat 1 hurricane. It hit further north as a Cat 4, but more notably with an 11-foot storm surge. And if ever you've been to the city of Tampa, you would know that 11-foot storm surge puts a number of homes with a little bit of water in their basements or on the ground floor. So a very difficult event that, of course, has had sort of its roll through in the Panhandle in Florida and into the Carolinas and Georgia and Nashville in Tennessee and even some Kentucky have been devastating to see. But we've been really fortunate in that we had 96% of our customers still had power within 24 hours of that event. We had 85% of our customers were restored. We had about 265,000 outages of 840,000 customers in total. And as I say, 85% of those were restored within 24 hours, 99% restored within 48, and 100% had power by early this week. So, really fortunate with that. And part of the reason, I think, is because of that preparation work. Now, of course, our team, much like every utility, has a very professional, brave, experienced team of power line technicians and workers who do amazing work in the restoration of a storm and making sure that we are positioned to be able to restore when there is an event, bringing in contractor crews, readying our own crews, through mutual assistance programs across the industry. We will share resources across the industry, as all the utilities have been doing now in the wake of Hurricane Helene. And so certainly that's part of it, and also having a regulatory mechanism that assures you recover the costs, so that because that's an important aspect of this as well. And all those things are, of course, true in Florida. What's additionally true in Florida, though, is some of the incremental mitigations. So some of the newer generation that we've built, or some of the existing generation that we've retrofit, we've installed flood walls, flood protection walls to protect against storm surge, which worked very effectively in this storm. We are in the midst of relocating our operations center to move it from right now a Cat 3 standard to a Cat 5 standard. That actually was a meaningful part of the CapEx profile within the rate case that the regulator and stakeholders are considering. That was part of the rate case application this year. And then, just as notably, maybe even most uniquely, is a number of years ago, after some hurricanes went through Florida, the governor, the legislature, passed some legislation that we refer to as the Storm Protection Plan, that asked utilities to work with the regulator in order to construct a profile to storm harden the system in Florida, so that we can be more resilient to storms when they do occur, but also restore faster. And we've been proving over and over again that investment, we've been investing about $200 million a year to underground systems, to harden systems, bigger, more robust poles, more tree clearing, things, to protect the T&D system principally. And we're seeing the positive impact of that. We are seeing the system be more durable in events like Hurricane Helene, and we're seeing the ability to respond and restore power more quickly too. So, pretty constructive. I think utilities and the legislative body both working together for benefit of customers to respond to, as you say, the very real fact that we're seeing more frequent higher wind events, more frequent heavy rain and water events, and we need to be prepared.
And I have to commend you with your storm performance, because the promptness of the restoration was phenomenal, and also your engagement and communication with the key stakeholders, regulators, politicians. That was all done very well in advance. So the preparedness was spot on. It was fantastic to see from someone living in Australia, very, very far away. But kudos to you guys. You did a fantastic job. there. Wanted to talk about your gas franchise in Florida, Peoples Gas, and that's a smaller part of your overall Florida mix, but it is a very fast-growing business. By 2026, you're growing your asset base by 12% when compared to where you were in 2022. Can you talk about some of the key drivers behind that strong growth that you're seeing in that business?
Yeah, Peoples Gas is really interesting because when we acquired TEPCO, I mean, really, this, the primary, the crown jewel of that, the crown jewel today of Emera, of course, is Tampa Electric. But we were really intrigued by this Peoples Gas asset, and when we acquired it, it was effectively a division of Tampa Electric. It didn't have its own management team. It was a shared management team between the gas and electric business. And one of the things we did is recognize there was a real opportunity with this business to serve customers, to grow, to create value for customers and value for investors along the way. And so we established its own its own balance sheet. And as you say, the growth has been quite remarkable. We've been investing CapEx at a rate of about 12% a year. We continue to expect to do that for the next few years. And the drivers behind that is, of course, as I mentioned, from a electricity generation perspective, gas is of course an important aspect of the generation mix. But even on the residential and commercial side, natural gas is an appreciated, seen positively fuel for cooking, for hot water tanks, particularly sort of tankless hot water heaters is a very common appliance for homes to have, particularly new homes that are built in Florida. They're very, very efficient. And so we're now seeing, sort of new home development, roughly a third to 40% of new homes would have a natural gas connection today. The business has collaborates with a number of the home builders in order to help them to understand the value of natural gas for their clients. And of course, because, as I say, 1,000 to 1,500 people a day moving to the state of Florida, not all of them, of course, are going to Peoples Gas territory, but Peoples Gas covers about half the gas service territory in the state of Florida. So a good number of them do. And we're fortunate and proud to serve them, and that continues to drive growth. So it's both system expansion as well as sort of system enhancement, repair, and modernization would be some of the key drivers.
Perfect. And now I just want to pivot to Nova Scotia. You kind of mentioned all the favorable demographic trends that you're seeing in Florida, immigration being one of them. But Nova Scotia as a province historically, has had a pretty flattish growth profile for a number of decades. But from 2015 onwards, we did see a bit of a pickup in population. And more recently, it seems like a bit of a population boom with, net immigration into the province. And I know your premier has, a long-term target to double that population by 2060. Can you talk about what that means for your electricity business in Nova Scotia?
Yeah, well, like Florida, having more customers is really helpful. And so you're right. We've seen almost quite surprisingly, not only sort of that little uptick since 2016, seen some population growth as opposed to a quite flat trajectory, as you note. But even since COVID, there's actually been, sort of a pickup again and more net immigration into the state from into the province from other provinces in Canada, as well as from outside Canada. And that's only a good thing because, of course, the ability to average the cost of serving across a larger base of customers helps to reduce rate pressure. And the other thing that we're seeing, and not unique to Nova Scotia, but it's got an interesting Nova Scotia lens to it, is the impact of electrification. And one of the things in Nova Scotia is still a very large portion of homes are heated with diesel, and actually many still with wood. With oil. I said diesel, but oil, and many still with wood. And so electric heat pumps are a very prominent thing here in the province. Has been both provincial and federal financial subsidy to encourage people to switch their heating source from oil or from wood to electric heat pumps, and it's been very successful. And that also is having a positive impact on on load, as well as obviously a positive impact on emissions within the province, which is also important. And as we do all that, of course, it does continue to drive the need to invest in the system in order to expand the system and harden the system. Many of the same kinds of stories I just talked about in Florida would be similarly true in Nova Scotia as well.
Perfect. And just to continue on this decarbonisation topic, because I guess you talked about that in the context of Florida, but also it is a big growth thematic in Nova Scotia. The province has decarbonisation targets that are prescribed by law. Can you just talk about how you've been engaging with the government and partnering up with the government to achieve some of the province's ambitions?
Yeah, and thank you for that question, because of course, it wasn't that long ago there was maybe a little bit of friction between the utility and the government in terms of navigating this path forward. But now you're right, there's a lot of collaboration that is happening. And to set the table, the federal government has policy that requires the closure of all coal plants across the country by 2030. And the provincial government has a requirement to achieve 80% renewable by 2030. And you don't have to go back very far, where more than 80% of the electricity in Nova Scotia was generated from coal. It is a natural resource here, and so it has been a big part of the generation mix. Today, we're 43% renewable. Quite a significant move. We now have more energy last year in 2023, more energy delivered to customers from renewable sources than from coal. So a big step forward, but there's still more work to do to get to 80%. And there's not much time. And so it's really important that there is a collaboration with the government, and the team at Nova Scotia Power has done, I think, a really effective job at working with the government as a partner in order to navigate this path forward. And therefore, the path forward to achieve this goal, the Clean Power Plan, is something that both the Premier and the province and the utility have adopted. Involves the construction of more wind resources. The government will do that through procurement and independent power producers, as has historically been done here in Nova Scotia. They will also look to procure 300 megawatts of fast-acting gas generation, or sort of backup support, while Nova Scotia Power works to install 150 megawatts worth of batteries. That project has already been announced and is in motion, as well as installs another transmission interconnect, sort of a strengthening of the transmission interconnect to its neighboring province to the west, New Brunswick. So both those second projects, the utility will do, the generation, the province will procure in coordination with Nova Scotia Power, and getting all those things done by 2030, and continuing to rely on the Maritime Link, this large transmission connection that we built a few years ago to the hydro resources ultimately in Labrador. That's the pathway to achieve these 2030 ambitions.
And it's a very aggressive and ambitious target. So I look forward to seeing the progress over the next couple of years to see where you guys are at. But it is a very phenomenal target. Now, you've talked about a lot of the strong growth that you're seeing across both your key franchises in Florida and Nova Scotia. The challenge that you have, obviously, is how do you fund that explosive growth? Can you talk about some of the recent initiatives that you've taken to position yourself to fund this future growth?
Yeah, and this has been a key area of focus for our investors. I know you included, I'm sure, Simon. In late 2023, as we refreshed our 3-year capital plan, and we will do that again at our next Investor Day in early December. In fact, we'll roll out a 5-year capital plan in December. But we sort of recognize the challenge. It comes with this tremendous opportunity to continue to invest and to grow, but is making sure that we're financing it, particularly in the context of what's been a higher cost of capital environment for the last couple of years. And so at that time, we announced that we would be looking to asset sales to fund 10 to 15% of that capital program. And as the year began, lots of speculation around what assets those might be. But ultimately, in April of this year, we announced that we were selling a economic interest that we had in minority interest in the Labrador Island Link, a DC overland transmission line from Newfoundland to Labrador for about $1.2 billion Canadian. We announced and closed that deal within a week of each other. So that transaction is done, and that capital has been recovered. And then we announced in July the sale of New Mexico Gas to Bernhard Capital Partners. Now, this one will have a longer than 5-day close. We do need to get regulatory approval for this in New Mexico, but this will result in about $1 billion Canadian, 750 million US of capital when it closes, that we are expecting early in the fourth quarter of 2025, maybe late in the third quarter of 2025. So two significant asset sales that, frankly, either one of them would have largely met that 10 to 15% goal that we set. But we had the opportunity to transact on both, and we did because we recognize strengthening the balance sheet, continuing to strengthen the balance sheet is really important, and particularly as this cost of capital environment evolved over the last couple of years. And so we've ticked that box, and then we also took additional steps and negotiated with the provincial government in Nova Scotia and also the federal government of Canada to securitizations, effectively an asset sale from Emera's perspective, a $500 million securitization of unrecovered fuel assets with the federal government, and $117 million securitization to the provincial government. So again, all steps that have actually, sort of contributing to our funding, reducing our debt, improving our balance sheet, making sure that we are on the right side of credit metrics. It's been a journey for us to get to the credit metrics that are sort of our own goals, and to make sure we get our ratings back to stable. We're solidly on that path now. There's no doubt or uncertainty about that. But we did take a couple other steps as well, and our payout ratio has been historically high for the last few years. And so while we've always been comfortable that our EPS growth will outpace our dividend growth, we took a step to moderate our dividend growth. And so we moderated our dividend growth to a rate of 1% to 2% for the next few years, but also for the first time initiated EPS growth guidance, and gave EPS growth guidance to say we were expecting EPS growth over the next few years of 5% to 7%. Which, of course, the combination of those two things means the payout ratio, of course, will come down on average 5-ish% per year over the next few years. All steps that I think really strengthen the balance sheet, position us for growth, continue to supply that capital that we need in order to continue to invest in the growth that largely is focused in Florida.
Perfect. And if I just take a step back and kind of try to synthesize what we talked about today, so you're seeing strong growth outlook in both your key jurisdictions, Florida and Nova Scotia, and that's being driven by favorable demographic trends. You talked about decarbonisation ambitions and the growth tied to that. You talked about grid hardening investments to improve reliability, particularly in the context of, physical asset risk. And you've got constructive rate-making framework and support from policymakers, as well as you're sharpening up your portfolio and your balance sheet to position yourself for that growth moving forward. Is there anything else that you think I've missed that you think is worth talking about? Anything at all?
No, maybe just sort of one override to all of that, Simon, is that I think these trends, the trends that have been driving that 7 to 8% rate-based growth CAGR that we have, sort of as the distillation of those things that you said, the drivers behind that, I don't see changing in the near term. These are drivers that are going to continue. Of course, electrification is going to continue. The need to decarbonize the electric sector is going to help the decarbonization of other sectors of the economy, which of course is important in many regions, not all to the same degree, but in many regions it is increasingly important. And so the drivers of our growth, I think, are very sustainable for some time, and we're also seeing the benefit, of course, of tax-based policies to help mitigate some of the cost impacts that this investment capital can have on customers, which of course is a really important lens as we think about the robust growth in front of us, is to make sure that we are not running into affordability concerns with customers, and that with our government partners is really important. Things like the IRA and investment tax credits in Canada and subsidies for heat pumps, and all these are very constructive tools that help to mitigate the impact of this energy transition and the cost for customers.
Got it. Appreciate that, Scott. Well, thank you so much, Scott, for the discussion today. It was a very good conversation. For those that want to learn more about Emera, where can they find you?
Well, we obviously have a strong web presence and social media presence, and so online you'll see our VP Investor Relations, Dave Bezanson. I know he'll be listening here, but you can see his contact information on the web, and he'd be happy to respond. But otherwise, www.emera.com.
Perfect. Thank you, Scott. Appreciate the conversation.
Thanks, you too, Simon. Really appreciate it. Good to see you again.
Likewise. Cheers.
Cheers.
Thanks, Simon and Scott, for that great discussion. Before you leave us, I'd like to draw your attention to the next edition of the GLIO webcast series, which features DWS and Williams, and will be available on our website from the middle of October. Finally, you can read the current edition of the GLIO journal on our website, and if you need any more information about the organisation or about membership, then don't hesitate to contact me at s.stevens@glio.org. Bye for now.